All right, and Gabe is in the house. We can officially get started. All right, fantastic. Let's get rolling today. Told you I'd cover a little bit about just my market outlook a little bit at the beginning here today. So let's jump into the markets, take a look at where we are. You'll get the my version of things here. So let's take a quick look at ES. So let's look at the S&P, ES futures here. Today we are up, a little bit today, 37 bucks on it. Keep trying to let everybody in. And look at the indicators that I have as well. Again, I'm going to have you mute yourself if you can. So if your dog is barking in the background, if you would mute yourself. That's how good dogs may or may not like what I'm going to cover. Vicky, I think that might be or Vladimir, one of you. Okay, maybe it was Vladimir. So, okay, let's take a quick look at ES. Futures are up today, been 3 big up days in a row. I think getting a little tired. Take a look at the key indicators. So I want to spend a few minutes just talking about the indicators that I use and some indicators on everybody else here if you have some questions. And can just real quick too, you don't have to all type in chat, but let me know that you guys can hear me. There's 1 or 2 of you, just tell me that it sounds okay. Yep, all good, perfect. That's all I needed to hear. Let's rock and roll and take a look at the market. So the key things for me are, I look at what's on this page more than anything, but you'll see this kind of aqua colored, this light bluish line. That's the 8 EMA. This green line is the 21 EMA. And then you have the red, which is the 50 moving average, not an EMA. And then you have the yellow up here, which is the 200 day moving average. Those are the only ones I really take a look at. You can litter your screen with as many things as you want to. Just gives me a sense of, really, to me, the most important ones are those 4. And then these gray bands are the Bollinger Bands as well. And I use them for a little bit here, but because I'm not, super big on trying to pick, breakouts on the Bollinger Bands are not a big deal. Because squeeze and MACD will tell you pretty much the exact same thing that the Bollinger Bands are telling you, and we'll cover those. These purple lines are my trend lines. If you guys can mute yourselves, like playing whack-a-mole here. So it's hard for me to keep going through and then having the whack mute. All right. So those are your moving averages that I'm taking a look at. Then I will watch the squeeze, the TTM squeeze. I'll use the Pro here, but I don't think the Pro gives you much advantage over the standard TTM that squeeze that Cost gives you, but you can use either one, in my opinion. MACD, my settings, pretty standard on that, the 12, 26, 9, exponential on the MACD is what I'm using. But I also, on this same area in the middle here, I've got RSI, which I'm using a 7/50/50 here. So I'm using the 7 period because I like the shorter. And then I also have this little blue aqua line, which is the, that's the RSI. And I have the stochastics as well. So I have the stochastics here, which are the 820 are my ranges, and then 14.3 is the settings for me. I'm really only looking for a few basic things as I move through it. So I want to see when does momentum shift, and that gives me a chance to figure out if I'm a put seller, which I primarily am as a put seller. I like to catch things when they're low and potentially heading up. Well, MACD gives you that, as well as the squeeze and a couple other signals here. As I look at the MACD here, as soon as the bright red turns to the dark red, the momentum has changed. Now, it doesn't mean it can't change and go back and change and go back and change and go back. That's all good. Okay, it's not the only indicator that I'll use for that, but you can see that it's starting to stair step up for multiple days. This is a very good likely bottom this time frame. We are in a daily chart, right now. If I look at the squeeze, it's always lagging. Squeeze lags and it's always late to the party. Sometimes that's good, sometimes it's not. But you can see squeeze will fire with the green dots. Squeeze will fire on average, according to John Carter, who created it, on average, squeeze will fire for 8 bars for whatever you're doing. 8 days, if you're on the daily, 8 weeks, 8 months. But 8 bars is the typical length and time the squeeze will fire. There's a lot of other stuff about squeeze you can read and learn, and I don't care. That 8 to me is a big deal, and it's pretty correct most of the time. You can see here 1, 2, 3, 4, 5, 6, 7, 8, and then it reversed. Now, is that always the case? No. Here it reversed, and then it went back, and then it reversed, and then it went back, and then it changed. So it's not the holy grail of squeeze indicators here, but it's pretty accurate for the most part. But so squeeze reversed its momentum here too. So we had strong down momentum. Everything was in, look, RSI's dropping, MACD's dropping, squeeze is firing negative. You've got the here, which to me might be the greatest of all indicators, is the 8 AMA moved below the 21. It told you here, get the hell out. Okay, so this was on 6-9. It said get out. Now we were only up in for a little while before it said get out, but it told you get out here. Then but you saw the momentum was coming out ahead of time. We knew momentum was coming out, so you had the opportunity, here to potentially close. Now some people will look at this as look at that, triangle. There's a breakout there. If it breaks above, well, yeah, if it breaks above this line, okay, it's been moving up, it hits some resistance here. If it breaks above that, yeah, beautiful. Okay. It wasn't going to do that because the momentum was coming out. Okay, so you could tell what was happening in here, that keep your powder dry, but there was nothing to tell you that you were going higher at this point. Again, just my opinions. Opinions expressed here are solely my opinions and not that of anyone else on planet Earth. But it told you here, get out. As soon as that 8 broke the 21, okay, nothing good was going to happen until it breaks back above. Okay, so you had a chance to get out. Didn't mean you had to get short or anything, but you just get out of any of the longs that you have. Now here, momentum switched on MACD, which is first always, and breaks positive. That's a pretty good sign. And then it started to reverse here. Didn't fire a buy signal yet, but you knew momentum was coming out of the down move in here. Okay, after we hit this trend line, and this trend line has been pretty doggone close. I can go back just a little bit. I don't want to spend too much time on this, but this is just that downtrend, the bottom support line, and it's not quite an exact channel, but I'm just tracking it as I go through. We're bouncing around in this channel. I'd like to stick to the 6-month view. Hopefully this is helpful to you, gives you a sense of what to look for when I'm looking at, is momentum going in or coming out of something. Then I take a look at the PSAR signal as well. Do you adjust put entries, Eddie, when extended and momentum is moving back down? I don't adjust much of anything. So if I'm putting that put on, you can adjust and you can look to close when you see the momentum coming out, but it's not the only indicator. So we'll get some examples of that and take a quick look. But also for those of you that have followed me for any particular point in time, the stochastic momentum is one of my all-time favorites. And as far as day trading goes, I think it's the best day trading indicator out there. I love the stochastic momentum indicator, the STOMO as I call it, when it moves down below the 40 or above the 40. As soon as it crosses down, that's a sell. Well, here it told you that the momentum had changed and it's coming down on 6-3. How did that match up here on 6-3? That was also the day that was the last high day. So all of those things lined up. PSAR said, get out, okay, on the daily. Everything else was telling you to get out on the daily. Here's the, I'm sorry, that was stochastic momentum. And then the PSAR signal, which is these white dots, gave you the official reversal was here late, but on 610. So a couple days later, it actually fired the sell signal here. And you could also see the CCI, which is the commodity index, which works just as well with stocks. As these things reverse down, it was not in an oversold territory like it was here. When these things are oversold and you get above or close to 200, when you get close to 200 and it reverses down through the 100, that's a pretty good sign that things are going down. And when it gets negative 200 and starts to come up through those numbers here, here it just, kind of couldn't make it, finally making it, to the flat line or the zero. Good opportunity here. You can see again, way oversold, stochastic momentum, way oversold CCI, moving higher was a great idea. Now take a look where we are on ES. ES is oversold, but it's still pointing up on the Stomo, so you could still have more. PSAR signal is high. PSAR will not reverse until a white dot touches the bottom of a candle, typically. You can see here it's going higher, 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 touch the bottom of that candle. The next day we reversed. So the closer that dot gets to the bottom of your candle, the closer you're going to be to a reversal. So yeah, I can send these to you if you want. They're pretty off the shelf. I'm not really a custom anything on these. I have gotten some of these from other folks. If you really like the Mobo bands and the Ichimoku cloud stuff, we broke the cloud here, which is a pretty interesting thing. Doesn't mean, so we still could see some more action going. Mobo's green, the green bands. I don't want to get into Mobo signals. You can zoom or you can YouTube those things. There's some people with some pretty good Mobo band stuff out there. I rarely look at this stuff. I'm not a big fan of that. For me, it's just too much stuff. I'm simple. You cross the streams here when the 8 crosses the 21, and I like it. So right now, there's no reason to think that ES is a problem. Now the momentum is getting long in the tooth. This squeeze just started to break out. MACD is getting high. Your PSAR is not close to reversing. These are oversold or overbought, but they're not ready to turn yet. So we still could get some more upside, in my opinion. But it's getting close to areas where it's going to get tired. And now that you're getting overextended, I think this is where you've got to start being smart, or when you are looking to potentially tweak the trade. So great question. Since I'm so mechanical, how do I use crazy stuff like technicals? Simply because this is what gives me my spec trades. It does not affect my 112 trades in any way, shape, or form, or my strangles. I could care less about a chart. You can put on a 90 DTE strangle at any day, any time, and you're going to be in good shape. If you are putting on 112 trades, you can pretty much put those on anytime you want mechanically, and I think be totally fine with 112 trades. So this stuff is not really for the mechanical 112 and strangle stuff. This is more for spec trades when I'm looking at, do I want to put on a trade in Oxy? So you guys know I love Oxy. This is one of my favorite stocks out there, and I've been putting on a bunch of puts in Oxy. So as these things dip down, comes down and hits here, this is a great time to get long. Squeeze reversed here. We're still climbing. Everything's climbing. We broke positive on the MACD. We haven't quite broke there. This is a good time to sell puts. Okay. If I look at, and I want to get confirmed on it, that we were oversold back here a bit, but up in here, look, it's crossing back up through here. So, all right, good area to sell puts. Am I going to sell puts on Oxy now? Probably not. So because of this, again, I'll be mechanical on my entry and exit, and Oxy we closed out of. Now, I did put a butterfly on Oxy. Why? Because you've got all of this momentum moving to the upside, and I use this for that. As soon as I see the 8 and the 21, we crossed. We're also crossing the 50 now. Bollinger Bands have opened up. We were in a squeeze. You can see how tight the Bollinger Bands were and the squeeze. It fired. To me, this was a great opportunity to put on a butterfly. It's not a good opportunity to put on, to sell a naked put. Does that make sense? I hope that makes sense for you. So this is why it'll tell me what I want to put on. I like Oxy. It tells me that we're in an uptrend. Things look beautiful on this stock. I think the earnings are going to be out of this world fantastic for Oxy. Warren Buffett wouldn't have dumped billions into this if he didn't think so. I like it. I love oil. I love energy. I think for the upcoming months and maybe year, they're going to be solid. I don't see any relent coming off of the fact that they're going to be bullish out there. And even though oil's dropped a bit, I still think it'll rally and keep going. And well, is it going to 150? I don't think so, but I still think it goes higher. But I got an uptrending stock. So how would I play it? So this is where this comes in, Eddie, if I'm thinking on my non-mechanical but spec trades where I'm mechanical on how I run them. Would I put on yesterday or the day before? When did I put that Oxy butterfly on? So the Oxy butterfly was put on back on 725. So 725 here is where I put on, right here. This is where I put on that butterfly trade. It's not a put trade for me anymore because of how far it moved that day, but squeeze has fired. MACD is moving higher, all on 725. I would sell my puts if I was down here, but after I've made this cross and this move, even though we came down and touched it, you could sell a put at 52, and I did sell someone. We got back in here. But now, if the stock has moved off of its low, now I'm a butterfly trader. I'm not buying calls. I don't do that. It's not my thing. I will buy butters. It's the only thing I'll buy. Everything else is a sell for me. But I can't sell puts on stuff that's rocking and rolling, but I will sell butterflies on stuff that's rocking and rolling. Hopefully that makes sense. I'm just giving you a little peek inside the crazy mind of me. So let's look at ES on this daily. This looks all pretty bullish to me, right? So things look really solid in here. And again, more questions, keep dropping them in chat and I'll give you my best answers on those. You know, we got squeeze firing, you got MACD firing, you got stuff starting to head up to some highs. You got this fib level potentially back in play, which was also previous resistance.
Oh no, of course, absolutely.
You got some stuff there. Who do I got to mute now? Let's see. Yeah, one mute, another mute. Okay. All right, yeah, guys, make sure when you come on, you mute. And so it looks good. Things look decent, but potentially starting to get overextended on the daily. Then we go to the weekly, and what do we see on a weekly basis? Well, look at the weekly. If you follow the same patterns here, squeeze had fired. Here, your 1, 2, 3, 4, 5, 6, 7 on the green dots here. 7 weeks, 7 dots into a squeeze. Typically, they last about 8 on average. Again, it's not a hard and fast rule, but squeeze momentum has changed. MACD momentum had already changed. This is a pretty good, and then this week we broke bullish. So this is going to be a MACD breakthrough. RSI and stochastics are moving up, but they're not there yet. I want to see both of those over 50. And right now, stochastics is at 44. I can't highlight it here, but you can see in purple here in this area here. For today, it's at 44.6. Now RSI is at 56, so it has broken the 50 line, but this hasn't. Both of those above 50, pretty good sense. This is a pretty bullish sign. So I think from a weekly standpoint, we're pretty bullish. We might be a little overextended on the daily. Okay, it doesn't mean that we can't just pull a little back to the 21 and then keep moving higher. I think over the next couple of weeks, we could really see some decent bullish action going on, or at least some sideways. Do I think we're coming back down to hit new lows? Probably not on the weekly right now. Again, price is all I care about, nothing else. And then if I look at the monthly, okay, what's happened on the monthly here? Well, you saw back here in October of 21, okay, MACD already started to show you that it was folding over. But you saw on the squeeze, the momentum stopped. That was it. And then momentum has been coming out. MACD did break negative. Squeeze has not yet fired negative. I tried to look at a time frame. Let's go back 20 years. And let's, it's hard. You can see it here again. If you look at the squeeze going back 20 years, only twice in 20 years has it ever broke and triggered negative. Once here in 2008, and the other one previously, I think in 2002. Only those two times has it ever triggered negative. It's come down and then rallied up. It's come down and then fired long again. It's come down. So the question is, what's going to happen in here with this? Look at, look how high this got. This was absolutely a bubble. You all saw it coming. We knew it was coming. Here, as soon as this turned in November, that was the end of this market. That was the end of the bull. Can it get back there at some point? Yeah, but it's not coming anytime soon, because you've got to completely resolve all of this and fire back positive. So I think we've got a lot of potential pain coming on the monthly chart ahead. I think, yeah, 110 trillion reasons why it hasn't fired short. Yep. So you've got QT, okay, which is a whole reason that they can't prop this thing up. And if this thing fires short in here, I think major pain. I don't know what that's going to be, but I'm not telling you, that I like it in here at all. So I'm very cautious long term, but short term, I think I'm pretty happy with where things are. Yeah, sounds like good premium. Absolutely. I think for what we do, as long as it's orderly, it can go down. Now, it's not going to help your IRA in there, depending on how you configured your IRA. My IRA doesn't have stocks or mutual funds or any bonds or anything else in it. My IRA is all either 112s and a couple leap plays when things get to a low, but that's about it. So it can be cut in half as far as I'm concerned, as long as it does it slowly. Slow bleeds are better than obviously fast for us and what we do. Anyway, so there's it's how I use indicators a bit. Are they foolproof, flawless? No, but it gives me a sense of, do I have the direction right on what I'm doing? If I'm putting on, a trade in here and trying, strangling something, I really don't care so much about what we're seeing in here when I'm putting on a strangle. Oh, but look at this thing. It's been in this range from 94, we'll call it 125, 94 to 125 for oil. And you're right, right back to the middle of this thing. Look at this 8 EMA starting to push back up, getting close. But oil told you here that it was time to sell. It also told you here that it was time to sell. So if you're buying puts or buying calls, okay, this is it. It broke, you buy a put. It breaks back the other way, you buy a call. Buy a call here, sell the call here. Buy the put here, sell it somewhere else. Maybe for most people that's not fast enough, doesn't make enough money, and they don't like to do this because I'd have to wait 2 months for my money, and nobody likes to wait 2 months for their money. As you know, we trade a little bit longer here, but I think look at this reversal here on oil. You hit some lows here. MACD is breaking positive, squeeze getting ready to potentially break positive. You can wait till the cross happens here, but this is a good time. Look how tight these bands are getting. These bands are getting tight and everything, and the momentum's up. And if we take a look at the SAR as well, that triggered a buy already here, and it's getting farther away from the candle. And look down here, you got to the negative 200, and it crossed up through the negative 100. Stomo is rising here, not overbought. I think oil is ready to roll. And Igor says oil's turning bullish here in his opinion as well. Do I use seasonality? No, I don't use seasonality. Too much work. Okay. I don't want to do any work. I want to take a look at my chart. It takes me 2 seconds to look at this chart and know what direction I'm going. I don't care what season it is, season of the witch, season of snow, fall, I'm just joking, but I really don't care about seasonality. You can, does it work? Seems to. People that are smart like Anya and Igor can probably use seasonality to their advantage. To me, I didn't have to. I just know the chart says it's going up, whether it's the right season or not. I'm just buying it. But that some people are super good at that. And you can you can get those figured out as you move through here. So all right, so there's oil. But yeah, oil I think is getting ready to roll positive. Bounced off of the 200. This could be a good, nice cross coming up here. So I think you've got a good spot on it. Yes, I personally like olive oil better for cooking. Anyway, so as we move through, let's just make sure, because I heard somebody else come in who's not muted. So let's mute the last couple of people. So there's some analysis. If you want to take a look at some other things, you can take a look at gold. So what's gold telling you here? Gold's telling you that it was going to sell off here when it crossed, and it never stopped. It crossed here on the 821, and it never resolved itself. So you shorted gold here, and there's no reason to stop yet, unless you wanted to just take your profits and run. Now, if you're from a mechanical standpoint, because that's how I play things, if I would have sold calls, it'd be 2x loss or a 50% winner for me. But if you like buying the puts and hanging on to them and shorting, you can absolutely do that here. But this is telling you gold has now reversed. So gold, just like oil, and gold is rocking. So gold told you here, I'm reversing. It told you here, I'm reversing. If we looked over here, it told you, man, this is oversold. And here it reversed. Here it reversed. Okay. Gold told you to get long on 721. PSAR reversed actually on 722, the day after both of these told you to get long, and also close to where squeeze and MACD broke. Everything told you here to buy gold. Gold correlated to dollar, I don't know. I don't follow the dollar. I don't care about the dollar. I don't know that gold's correlated to anything. I don't even think gold is an asset class that anybody even cares about anymore. Just personal opinion. And it's not, obviously it's not a safety class, because if it was, everyone would have been buying gold when the market reversed and nobody cared. Nobody bought gold. Yeah, supposed to be correlated to the dollar, and you can watch that too. And the dollar's starting to make some gains. You can look at bonds, all the same indicators. Well, it told you here to buy bonds. So this is where you would have bought bonds. Okay. And then you stay in. I don't know what more you need to figure it out. XLE, this is why I like energy. Here, energy is in a sell mode, but look, energy just crossed. Energy is telling you right now, you better be in me. And I'm rocking and rolling. So energy, PSAR reversed here. It's getting a little overdone, okay, but it doesn't mean it can't stay there for a while. So I like energy here. That's why I've been playing Oxy, and I've been playing XLE with puts. Notice why not sell puts here? Now you can't sell puts. If you want to play XLE, you either got to buy calls or you got to put on butterflies. Again, that's just my mechanics of it, because I only play 3 pieces. If you look at my trade plan, and we'll share a tad of that today as well. If you look at my spec trades, there's really only 3 spec trades that I do, maybe 4. All right, we'll call it 5. Sorry. And one of them are 112 trades on some of the futures like RTY and NQ. Those are spec trades for me. The 112 calendar trades, which I'm starting to get into, kind of liking that. And the credit spreads, and then strangles on futures like gold and oil. I love those. And then lastly, it's butterfly trades. So why butterfly instead of a put? Well, again, what I said was I will sell puts when our momentum is reversing or first reversing. I can't sell a put when something's taken off already. Well, it's too far from me now. It's on fire. And if something's on fire, then to me, you buy a butterfly. If you're, puts, I want closer to a support level. Okay, this is this was okay to sell puts in here because everything said we're going higher. Sell puts because we're closer to a support. Now we're too far from it. So there's no selling a put here. I'm gonna have to sell a put at 73. Maybe I'll sell it at the 21, but I don't like selling puts on stuff that's on fire. And no pun intended, oil's on fire. And so is energy. Then if you take a look at, let's just take a look at a couple of the big boys, and then we'll get into some trades and look at some other things today. Let's look at Apple. Would you sell a put in Apple right now? No, it's burning. It's on fire. Apple is in fuego. All right, we'll talk about strangles in a minute. This is on fire. It crossed here. The time to sell puts in Apple was back on 7.6 when it triggered a buy or triggered the buy on the squeeze. MACD was positive. RSI and stochastics were above 50. It crossed the eight, which is the torque, the light blue, and the crossed the 21. That was the buy. That was when you sell puts. It's too late to sell puts now. This is where, when it comes back to test this and starts to bounce, that's where you sell butterflies, in my opinion. Or you buy stock if you like, or you buy calls if you like buying calls. I don't buy anything except butterflies, because I can make a lot more money on a butterfly if I'm right. I'm giving myself that shot to be right on it, and I don't want to have to watch stuff. Where would I sell a strangle on this stuff? I don't like selling strangles on anything that's not an index, because this is why. Look at Apple. Look at ES. Okay. This is much more controlled move. Apple or Facebook, or this doesn't happen in an index. Okay. This is pretty much more what an index looks like, but you could probably be selling strangles on Meta if you want. I just don't like selling strangles on individual stocks. I hate stocks. I will sell some puts on a few, but that's really not my game. I just don't like it, because you could have great earnings and tank because your guidance is crazy. Look at, and I think too, I think this is a perfect time if you want to consider long-term leaps or puts on Meta, only because I don't think Meta is going down a whole lot more here. But I would be pretty happy in the 140s to be selling long-term puts or be buying some leaps around here. I think this is good. Now you've got the cross. Can it be going down more? Yeah, I think from a long-term standpoint, you give it a couple more days, but I'm not doing that. Netflix, same thing. When stuff gets moving, it gets moving, and I can't stay in it for long. Google, been a really good trade to stay in. However, Google MACD positive, little bit of this reversal here. You're about to cross, although you've crossed and crossed and crossed and crossed. Go to another indicator. You get a PSAR buy signal today. Stomo pointing up, CCI is moving up. Google's probably a good bullish bet for now, but you can't sell puts now. It's too far, in my opinion. I mean, if you can sell 100 to 105 puts if you want. You could probably do that, but the premium's not as good as if I had sold in here the 100 to 105s. Now it's going, so now to me it might be more of a butterfly type trade if it keeps moving. Stops on my puts, yeah, all my stops are always the same on puts and put spreads. It's always a 2x stop loss and a 50% winner. That's it. There's no more magic than that. No adjustments, nothing. I don't have time for that. So you can get fancier. You can do all kinds of stuff. Personally, you can, if you want to be assigned and you've got the account to do it, you can be assigned it. You know, question on volatility, how it impacts entries, income hedges. I'll be honest with you, I don't look at it. The only thing I look at volatility wise is the VIX between 20 and 30 if I'm going to do zero DTE. If it's above 30, I'm not doing zero DTE. If it's below 20, I'm not doing any zero DTE stuff. And then if I'm looking at individual volatility on, let's switch screens. Let's take a quick look at, hopefully this is helpful. Hopefully you guys are getting something out of this. Let's take a look at Tastyworks. And let's take a look at where we are on some things. So Oxy. So we're in Oxy. We've got, here's our account. We're up okay today. We're up decently since the open, so it's all good. We have two down today. One is Uno or UNH, which I did a butterfly on because I wanted a low risk reward. I mean, we're up 31% on it, so I'm okay with being down $10 today. Oh, 8, it might be positive. We keep watching it. So we've got a butterfly in UNH, and then SPX. I have a standard butterfly that's a hedge because I wanted some negative delta. My deltas in this account are negative actually. So if you look over here, you've got, this negative 52 is offsetting that. This negative 27 is offsetting these negative 19. I have negative delta in my account and I'm up on an up day. That's a beautiful thing. So markets are up 1%. I got negative delta and I'm making money today. So hopefully that makes sense on this. But when I'm looking at a stock, am I looking at this IV rank? I really don't. If I like the entry, I just enter it. I don't scan for high vol. I don't scan for stuff over 50. I know that's a tasty trade type of thing. Look for the high vol stocks. Well, if the volatility is 70, most likely earnings are like a week away. I can't place a trade in the thing. If the volatility is 70 on a stock, is it in a roaring uptrend? No. So I don't know how that volatility is helpful in trading. Personally, just my personal opinion. You guys can crucify me on it, but if volatility is high, the stock is typically going down, and you're probably, or something, or it's getting close to earnings, which means it's untradeable for me. What's a good? Somebody give me a high vol stock. Anything with high volatility? Even ARC. I only picked it because Crazy Kathy. So let's take a look at ARC. It's got a 44 IV. Wow, that's great. You know what? We should probably just go and sell some puts in ARC because look at that volatility. I can get out here, sell a 38 put, and I want it like, geez, that's pretty good. Anyway, so profit. I got a pretty nice profit here on. If I put $1,000 into this thing, I can take home $105 because I'm going to look at a 50% closing rate, right? Would I do that? I don't know. Let's take a look. High volatility should be perfect, right? That means everything's perfect. Oh, wait. It's about to trigger possibly a sell signal again. The stock's breaking down here. It's been totally flat. All the momentum has been coming out of this stock. MACD's triggering negative. PSAR is about to go bullish or bearish. So it's been bullish here. It's about to trigger bearish. MACD, or I'm sorry, STOMO and the CCI both telling me, they're both pointing one direction. What direction is that? Say it with me. It's down. Okay, so just because it's a high vol stock, okay, Tasty Trade says buy it. Well, why? If the thing goes to 35, okay, and I have the 38, that's not going to be helpful for my stock. So hopefully that makes sense as to why I don't pay attention to vol, because vol is usually, and I don't like being negative. So again, you get more opinions from me. I can't buy puts. I can't short stock. It's a karma thing. I know it sounds crazy. You should be able to play stocks up or down in any direction. I really have I can't short stuff. It's just a weird thing for me. I just don't like I don't like shorting, especially because I've been in a bull market for most of, my adult life, and things go bad when I start to short in short stocks. Could you have done it? Should you have done it? Yeah, you could probably have made a fortune this year. So the shorts probably making some pretty good money, but I'm making good money and I'm not shorting, and I'm happy doing my thing. All right, so let's take a quick look. Let's get back to Tastyworks. And let's take a look at this particular account, and let's get a sense of stacking. You know what's going to be more helpful to you is, let's go deep into the craziness. All right, hopefully you can see me. So this is my trade tracking spreadsheet. Somebody just give me a yay, you can see this. I want to make sure I shared the right thing. There's not much else here that I can share that is going to be important to you anyway. So, yep. All right, cool. Thanks, Rob. All right, so here we go. 90 DTE strangles. I have 2 of them on right now. Okay. I'm going to show you my trade plan in a minute, but my trade plan here is I'm not using more than $10,000, which means, and I won't have more than 3 on. I only have 2 on. Why? Because 4 of them have expired this month so far in July. So I got 4 of these strangles. Yeah, we made $3,200 on that so far in the 90 DTE strangles. So they keep expiring on me. I keep making money, and it's harder to put these on and keep my strikes different. So I want different, I either want different strikes or I want different expirations. So now I got to wait till the market moves up or down at least 100 points or more before I can put my 3rd one on. Otherwise, I'm going to have 2 that are the same, and my risk is too high. Okay, so when I stack these strangles, 3 of them, I need different strikes. Now these are close; they're 30 points apart, but we're different expirations. So I feel okay. I don't feel great on it. So let's look at the 112. So here's a question that I had on stacking them. So let's take a look. So I got one expiring today in ES. So this one's expiring today. It's going to expire worthless at 0. So we're going to make our $700. That one's expiring today. Normally I'll try to put one on, take one off, but I couldn't resist adding. So I got one for next Friday. I got one for the Friday after. I got one for the Friday after. I got one for the Friday after. Because I didn't have the other Friday available to me right away, I got one for like a Tuesday. Then I got the Friday. Then there isn't one available yet. Yes. So there isn't one available yet on that strike. So I can't put one on for the 9th yet. So the 16th I have on, and then there isn't one available yet for the 23rd, but I have the 30th on. And when we were in an up mode, in a bullish mode, because I showed you earlier that I think we're in a weekly uptrend and a daily uptrend for a while. So I put on a 112, which is a high, 112 high, as I call it, which means instead of my usual $14 credit, I get my $20 credit or my $19 credit. I've actually had, haven't had any one of those expire yet that are the high credits, but nothing this month yet. So that'll be the first ones that come off. So if we're in a pretty good uptrend, I'll probably, and I think we're in an uptrend based on my chart and based on the 21 and 8 and some of the other indicators, I'll go for a little bit more credit. Not on every one of them, on a few of them in here, but this is the stacking of the 112 trades. I've got $40,000 in buying power chewed up. I know this is probably throwing it off because when I put that on with some of the other trades I had actually a negative. It actually reduced my buying power. It's no longer there. It's probably a $7,000. So I'm a little bit over BP. So I'm a little cautious. I don't really want to add anything more. I'm extended right now, and I don't really want to be any more extended than this. Typically 6 is my goal. I'm going to have 8, and that's a little too much for me. So I got to chill out a bit. So probably no more 112s until next Friday. then we'll keep an eye on. I'm waiting now for the 9th. So that's it. So I won't do anything on ES until there is a September 9th expiration. And right now there isn't. So there's no 9th and there's no 23rd. So until those pop up, I'm done with ES with 112 trades. They're laddered on, and I feel pretty good. And I loved the credit I was getting at 60 days here. So to me, that was fantastic. So hopefully that answers the credit, that piece. Then, so that's it. Yeah, so 90-day strangles, some 112 trades. This alone is going to fund some pretty good money. So here's your ES 112s dating back to February when we really started that. Yeah, I'm up like 31 grand on these. Do you see any red, by the way? There's never been a loser, knock on wood. I should never have said that. But these 112s keep expiring, but a lot of them are expiring in the trap. So the $700 ones, you can see that's what I put them on for. Okay, yeah, I'm only making 100%, but the other ones, 300, 171, 237, 300%, 132%, 167%. So when you look down at all of these, I think I posted it the other day, less than half or almost half of these this year have expired somewhere in the trap and given me more than 100%. So these are, and my goal on these is one a week at 700, which puts me at $2,800 a month. Okay, I'm just trying to make $2,800 a month on roughly, $28,000 in BP. So overall, though, but last month, look, I closed 6 of them. So I had a couple more than one a week. One I did a put call version on, which means that I sold the put debit spread and then I sold a call and a put on that same one. So I sold a call and a put, so one of each. So I did like a strangle 112. That was a little funkier one. So a couple things you can do, but anyway, this gives you a sense of what I've been making on those 112s. This is what I've been making on those strangles. Those strangles, do all 3 of them come off a month? No, sometimes you get 1 or 2. Sometimes you get all 3. And then this month I got 4. Okay, so but for the most part, I'm looking for $1,000 a month. Usually, I'm at least that or more. This happens to be a good month on those. These 2 strategies alone, if you did nothing else, I think you'd be in really good shape. I'd probably be in good shape. So I'm just giving you the real scoop here. Now, my hedges, I know it's not a true hedge. It's a 112 hedge. It's the big ass 112 trades that I like to do. And I put these on for almost no credit for the most part. Now, there is an exception every now and then, can't help myself with something, but I like to do 50 wide on the put debit spread because I want 50. I don't want 30. I don't want 20. I need wide traps. I don't mean long, although these are long too, but I want fat traps that if something gets in here, it's just 50 wide. Okay, 50 wide is going to give me $2,500 if it falls into the trap, plus the little minutia of credit that I get. I'm not worried about hedging because does this look like a portfolio in a downtrending market that needs to be hedged heavily? No. So why would I, so my hedges are actually not real hedges. They're just really low credit. I'm getting paid to put a hedge on, chewing up buying power. So you got to have the BP to do it. This one I put on the other. So yesterday I put on the really big 112. Okay. So that's the RBA 112. I know it sounds stupid. So the really big 112 yesterday, look at the width on that one. Okay, so it's just on cue. Who was that just posted that in chat? Eric, there you go, man, right there. There's a 75 wide trap. Okay, that's like $3,500 if it goes in the trap. And I sold the 2 puts at $3,500. Okay, so I took in 75 cents. So whatever, but that's a big chunk of change, man. So if you're going, and this was a 113, I believe. Was it not? We got to go back to the trade. Hang on. 3,500. August 26th. Yeah, I think this was a 113 actually. Okay, this is the one I was talking about taking Igor's trade, and I made that. Yep, it was a 113. So yeah, so I took Igor's 113 and I made my own type of thing out of it here. So it's doing the same thing that all of these other ones do. Yes, I have this put on that. I did buy that one. I will lose $740. Okay, but I also have the chance to make, you know, a ton of money. So if it goes in, if it lands in around 3,700, then I'm going to have $100 credit on that thing on SPX, and that's a nice chunk of change. So I'll take 10 grand if the market tanks on me. That'll help offset some stuff. Plus these will probably head in the trap. So now we're looking at like a $20,000 gain. But yeah, this was a really big ass 113, super wide, 75 wide. I sold 3. Did you have to sell 3? No, I did it. I had the BP, so I did it. So there. And then the last thing is spec trades. What do you notice in the spec trades is you only see 2 or 3 types of spec trades. And you know, spec trades have been the bane of my existence most of the year, right? Take a look at this. We're up $8,000 with only 1 loss on spec trades in the month of June. So stick that in your pipe and smoke it. So we're up pretty good now on spec trades because 1 month. Now look, 1 month, an $8,000 month puts me up $3,600 for the year. Okay. Still stupid to put all your spec trades on and make like little money or lose some money. There's some more red. This happened to be a good month that I just couldn't get anything wrong. And just happened to work out. Doesn't work out that way all the time. But on these spec trades, these 112s almost always do really well. And you can see this one's on RTY. This one's on NASDAQ. NQ I don't like because of this. NQ is a margin hog. And it's, oh, and you have 50 wide increments. So you got to go 50 wide on the put debit spread. I still do it. You know, this thing is so far out. I mean, it's a nice trade. It'll give me $600. And when it closes, you know, that's 4%, but it's a 4% return on a 42-day trade. That's still above my 3% rule. So I'm fine with it. Is it the best use of $12,000? Probably not. You'd probably be better off putting a more RTY or something else on. You can see there's a strangle here in RTY. There's a strangle here in CL, another strangle in RTY. And then what did we close this week? We closed a strangle in ES. We closed a strangle in CL. We closed a strangle in ES, a strangle in ES. And then and gold was a put spread, not a strangle. But yeah, the gold strangle that we closed yesterday as well. So a lot of these spec trades came off this month. Here's month of July. These 4 are on the dance table today to expire worthless. The market's going to have to drop somewhere in the neighborhood of, I don't know, 1,500 points today. So I'm pretty sure that's not going to happen by 4 o'clock, but you never know. And these will all expire. So today will be a nice little day. We'll make, you know, $2,100 or something today when these expire. We'll make $10 on that 441. I don't typically do many of those, but they're all wins. Now look at this month. 31 winners, 1 loser. Kiss my rear end, active traders. So even premium guys can win after sucking for 2 or 3 months. So anyway, so you get the point on that. It's been a good month, only one losing trade. Now that makes you mad. Doesn't that really? A butterfly and ES that I put on went south, and I closed it out for a loss for $358, and it wrecked the entire month for me. I'm still mad. All right, so here's your book called Broken Wing Butterfly, spec trades, your strangles, your 112s, all of that. So this gives you a sense of, that's what the trading, that's how I stack. That's how those things are set up. Take a look, one more thing here today. Let's take a look at quick trade plan. And then if you want to get into, if you guys got questions, drop them in. If not, hopefully this has been worth it. Trading plan, not much different up here. My goals are still in my IRAs about 1.5% a month, and in my trading account, really it's probably 3%. 4% is nice, and I will probably hit it anyway, but 3% is really the goal. I'm just looking at the monthly and weekly dollars, not really percentage. Once I figure out what the percentage is, then it's all about the dollars. Risk management, my trading rules, my sizing. Here's my strategy. Simple. You got 3 different pieces here. You got these 90 DTE strangles. I'm expecting them to net me $1,000 a month on it. So I'm, on this account, which started at 160, but it's now, as of this afternoon, we just topped 208,000 for this year. So we're up 49,836 for the year. So 49,000 up for the year. So we're doing okay right now, but we started at 160. So this was the trade plan. Even though my account's bigger, I haven't really changed the minimum amounts. I still want 3% a month, which is $4,800. How do I get $4,800? Well, if I do these 3 strangles, even if only 1 expires a month, I make 1,000. If 3, then I'm golden. Okay, ES trades. If I make $700 a week and I have 4 of them, I make $2,800. And if I can eke out $1,000 worth of spec trades, I make my $4,800. Or if I get a little bit more out of this or this, which I have been, I'll make my $4,800. I just need to make $4,800 this year. If I do that, I'll be in good shape. This is the BP allocation for each. Now, obviously, I am over this by about 10 grand in BP right now. So I won't be putting trades on for a week or so until those 2 strikes or 2 expirations I need opens up. Core strategy, super simple. The 90 DTE strangles. Now, where's the $10,000 account with this? Core strategy doesn't change. The core strategy for every account for me is the 90 DTE strangle. That thing is a religiously good trade, that super high quality. So all I'm doing is in the 10K account, I'm doing MES on these. An MES strangle is going to cost you $550. I'm doing 2 contracts, so it's costing me $1,000 in BP on that, and it'll make me about $300, or give me about $300 in credit. I'll take it off at 50%, so it makes me $150 a month or so on that, if you follow my math. So on the 10K account. So 10K account, if you take in $30 credit on MES is only worth 5 shares, so that's 150. So I do 2 of those, take in 300, 50% winner gives me $150. If I get 1 or 2, if I get 2 of those to expire a month on me, that means I'm going to make $300 a month on a $10,000 account, which is going to put me exactly at 3%, and that's my goal. However, we're also going to do strategy number 2, the 112 trades. If I put 1 MES 112 on a week, and let's say I'm taking $14 credit. Okay, so you got your $14 credit. You're going to take in $70. You're going to have $70 expire every single Friday for 4 weeks. That's going to be $280. So now I'm making $280 from those, from the 112s, and I'm making $150 to $300 from these 90 DTEs, and you don't have to do anything else. I mean, that's going to be like a 5% return. Okay, and I know, oh, it's 10 grand. I want to get to 160. Well, the easiest way to get to 160,000 from 10 grand is put another $150,000 in your account. Otherwise, you're going to build it at $300 a month for the first year, and then you're going to put in, a couple $1,000, you're going to up that and go next year. That's the only way that 10,000 is getting to 160, but it's 10%. That 10% account that I'm trading to is my kids' graduation, part of her graduation money and stuff. Because since she got a scholarship to college, I took all her money, or I took some of her money and I threw it in the account and opened it. So that's what that's where we are. If I look at the rest of this plan, then the spec trades, those 112s, those 112 calendar trades, which we can put one on now. I know we're getting over time, but we'll go a few more minutes. We're going to put a 112 calendar on right now. And then other spec trades would be, we got it. Other spec, you could put credit spreads. I like my credit spreads to be in the 26 DTE range. I like them there. I like to get at least, I think it's more like 10%, but we'll cover these. I like to get at least a 10% return, which means I'm going to close it at 50% credit. So I'll make 5% in probably 10 to 15 days or something. I love strangles on futures and then those butterfly trades. So those are really the spec trades that I have in there in my account, and I'll play with those. So let's do a calendar. Let's do one more thing today, and unless you got some more questions, let's get some calendars on. So a quick look here. Let's close these down. All right, let's get an ES calendar trade on and go to trade. Oh, got a question. Can you share the files? I will share you my trading plan. That spreadsheet is in the same spreadsheet is in the pinned. I pinned a copy to basically a blank Google version of it. So you don't need mine, but you have a blank version of this thing that's pinned. So you have this thing pinned up in here. So if you go threads, I go up to the pinned items and scroll down. Yeah, it's right here. So it's like the, I don't know, second or third thing down right here. There's the Google Doc spreadsheet. So here's the same tracker with a bunch of old data in it. So I left the old data in it so that you can figure out what was in these things here, but it's not, the current one, same thing. I haven't changed it. And then I tabbed at the bottom. Here's my ES 112, so I can track how those are doing year to date and by month. My 90 DTE strangles year to date here, and then by month. My spec trades, year to date, each month. June, July. It's actually July now. And then the 10K trades as well. So there's the trades I'm putting on in the 10K account. It'll have its own separate spreadsheet. And then older style trades and stuff along the bottom here, which the strategies I don't typically use anymore. All right, let's rock and roll back in and let's try to get one of these calendar spreads on. See if we can do this quickly for everybody here. So we want to go out and I'm going to typically sell a put debit spread on these calendars around 45. This is 49. It's close. Let's get a $6. Probably have to go higher than that. So let's get like a $6 or a $6.30 wide. Oh, 550. Boom, boom. Oh. Hello. These are funky spreads. All right, 550 is close. I'm not going to, or 675. Looks like I'm not going to get a 6. So we'll go with this one. All right, so let's just rock this thing on. It's 550 debit. That's okay. So we're going to put that trade on because I have so much stuff running. You can hardly tell. But we'll drop that thing in. We'll let that work. And now while that's percolating, we want to look at the 60 DTE for the put spread and going down around that $20, I think, Rod, you were talking about 8 delta. And I think 8 delta is a good place to start looking in this, that $19, $20 range. And I also look here to see if the open interest is really high at one strike or another. because then, I feel a little bit more comfortable that somebody's targeting that. I'm going to go a tad lower on this one. We're going to go 2. We're going to put an order in at 18, and we're going to see what happens. Okay, so we've got it working right now. You can see that strangle. Once those strangles get put on, by the way, here, I'm putting in my 50% orders on them. And you can see that this order is working right now. Okay, in here, another, oh yeah, that was a vertical. Should be coming off. Looks like we're sitting right on that. So this was a vertical that I put on in ES. Gotta look at that. Get that one out. Oh no, that's the one I just put on. Sorry, I got a little lost. All right, and so here's the option. We're off a little. Let's just let it percolate a bit, but you get how to put it on. So essentially, what's going to happen is I'm going to take in. If we just want to be done, I don't like it, but I'll give up some bucks just to do it. All right, so we're going to close this thing at 1775. Okay, so we took in 1775 on that one. All right, times 2. Okay, and everybody can do the math, but 1775 times 2 is what, 3550? All right, so the total credit is 3550 minus the $6 for this one. Now, fight with them. 550. I mean, I really don't want to go over, but I just want to close this thing for you guys. So let's just do it. Yep. So trades are easier when you give them your money. So that was it. So 575, I think, is what I took in for that particular one. And so 575. We'll go back here. $35 minus the 575. Okay, is I'm entering into the spreadsheet, and we'll enter this into it. So we're going to take in a credit of $29.25. Let's enter this thing into the spreadsheet. Hopefully I'm sharing the right stuff. I always get nervous when I'm sharing that I give you guys the right things. This is how all of my mistakes happen that some of you guys are always on me catching. It's because I cut and paste so I don't have to type from scratch. All right, so this is a calendar 112, and here's my trades. So we did the all right, we'll put in the short debit. So this is December 9/16 debit spread, and the 9/16 debit spread was put on with the 39. Oh, I only went 25 wide, not 30. All right, well, we'll deal with it. 39.50. It's all good. I don't really care. 39.25. 39.50. Yeah, it's a 25 wide. It's all good. And then we put on the 9/30. We sold 2 of the 3500s. Okay, so there's the trade that I just put on. I did this for a total credit of, what did I say? 29.25. Okay, so put this on for 29.25. If I really go back and take a look at the buying power on this sucker, all right, so buying power on this was 49.17. That's the buying power for this particular trade. No, wrong. There you go. This is right. Buying power on this trade is 88.17. I knew it should be higher. Grabbed the wrong strike. All right, so 88.17 is my buying power for this calendar. I'll typically take this, copy it. We'll go over here. We'll drop it into alerts. It's the magic behind the scenes of how things get posted and putting it in there as a credit trade. So there's the calendar that we just did, the 919, only 25 wide, which I should have gone 30 and I didn't, which is why it was cheaper and lower. And then the 930, 52. It's all good. 29.95. Our goal on that trade, though, is going to be 65% of premium capture. These are different. It's a spec trade. So I really want to close this thing at like $19. So when this thing gets close to $19, no, that's not right. 19 is what I want to take out of it. 19. Okay, so I want to close this at $10. Gives me my 65. So I want to close this thing when it gets to $10. I want to get my 65% premium capture on this. I'll make $1,000 on this trade if it works out. And hopefully that this one performs similar to this last one, where even though it was a 44 DTE trade, we closed it in 11 days and made $1,200, which was which is a return of 12% over 11 days, which I don't know, what's that? 1% a day. That's a 365 annualized return. All right, so hopefully this makes sense. Hopefully you guys got a good idea. We covered a lot of stuff today. So we covered the trade plan. We covered some of the technical indicators. We covered some of the trades in the account and why. We covered how we stacked trades. We covered why certain spec trades over other spec trades. And then we covered, again, the tracking sheet as to how I try to keep all of that stuff set. Any questions before we hop off? I know we're about 15 minutes over, but hopefully it was worthwhile that you got some insights out of it. Any last words, questions, comments? You can tell me I'm nuts and crazy too. Don't matter. So that's it. You just come up with a, oh, you want me to go through the IF 0 DTEs and give you, it's hard to, we'll do one quick. I mean, it's super simple trade. This takes zero knowledge to put on. So if you're going to do a 0 DTE, obviously I'm not going to put it on right now, but I'm going to take a look at the right at the money as soon as we open in the first 10 minutes. Where are we? Obviously, the premium sucks right now on it. But if we were doing this, this morning, this was closer to like $28. So you're getting like $14 for each side. So I think you're getting like $28 for this premium. So if I'm getting $28, we're only getting $16.70 here, but I would typically double this amount. So if this was $28. Okay, so if I was asking for a $28 credit here, I want to go at least twice that wide. So I will typically go about 60 wide on it. So 60 wide from here would be what, 55? I think that's the 40, 55, and then 60 wide from here would be like 75. Okay, and then that would be it. I'd put that trade on for, again, somewhere, around 28, probably $28 or so. It was probably 30 something this morning. Rod, I think you did it. You probably hit the right spreads this morning before you adjusted it when we were looking at yours. So I think Rod had one on this morning. So yeah, at 40.90, he, essentially he was 60 wide on that for 28.50. So yeah, like 28.50 is what you got for this thing this morning. And the goal is, as soon as you place the order, you place an opposite order for $1.50 less. So if I put this on for $28.50, then I want to take it off for $27 debit. And that's it. Let it cook. And then I will stop out if whatever my credit was, if I add that or subtract that from the center, which is 41.15 plus or minus 28, as soon as the market hits that number, I'm closing it. If you want to get crazier with it, you can So it's basically $29 up or down in SPX. If SPX goes more than $29 in either direction, you stop out and you're done for the day. Or if you use the Jim Olsen version, you could put another butterfly on exactly at that point that you get stopped out and look to minimize the damage. You get your $1.50, which just, and typically that has worked pretty well. Although if you get a runaway freight train, it could be worse. Today would be a good day. If you got stopped out, today would have been a good day to do that. You could have still been in that trade and recovered some of that money. I don't try to get $3 back if I lost $3 on it, but I would try to get, my $1.50 on the second one, but that's it. And typically I will, it's not written in plans anywhere. It's just in my head. But if it starts going against me by, $3 or $4, and I still feel pretty good, I'll put a second tranche on. So I usually will put half as much on at the beginning as I want to trade. And if it goes against me by $4 or $5 early, which is not going to get me stopped out because I have more room to go. But if S&P is moving $4, $5, $10 or something, or halfway, if it's moved halfway to the target, that would stop me out. I would probably put a second tranche on at that point for a higher credit. It gives me an average down. And then if we mean reverse a bit. So once we're more than halfway to getting stopped out of that $28, once S&P has moved at least $14, $15, after that, I'd probably put a second tranche on. If it never happens, then I just make a little bit of money and, I get to go out and eat steak dinner or something. All right, cool. Hopefully that's all good for you guys today. If you need anything else, just hit us up in Slack. Igor, myself, Gabe, you got fantastic people in here. You got a lot of guys that have been trading for a long time in this group. Rod's been doing fantastic stuff on his accounts. I think he's outperforming me on the year. So Rod's doing great on that as well. So hit anybody up and we'll help you guys out. If not, enjoy a fantastic rest of your day. We'll get this recording over to Igor. He'll post it later on in the day. Thanks, guys.